All right, so good morning, good afternoon, good evening. As you just heard, we have a whole roster of news lined up, so we'll be busy. We just have to wait for this stuff to come out in about 4 minutes. I'm still carrying yesterday's positions, well, actually, Friday's and yesterday's. I still have a hedge which has not triggered right there. And so my break even is here. We're getting ever so slightly closer to it. We're only 18 pips away. All right. And so as far as I'm concerned, the news is either going to impede what I've been working on for 3 days or really help me and close everything out. Ultimately, my personal target is at support, right? So if we go to our daily chart, knowing that this news is coming in 4 minutes, when we look at the daily chart, yesterday we made an ever so slightly higher high, but we created this upper trend line. If we see this as a channel, overnight we failed to break the channel, and we are, maybe heading to 61%. Right? The opposite side to this would be if we get bad US numbers, we're looking to go up, and the next target up is 50% of this move down. Right? So we're at the 38 right now. We'd be looking to go to 0915, 0920. Right? Being that we are already at 38%. Okay, so I've been bearish for a few days, and I'm looking to get down to this 61 of the smaller range before we try to go higher. Okay, so I'm playing for this leg right here. I've been playing for the next leg, this current leg, what I have in front of me, for 3 days. Right, looking at this intraday, this was yesterday, this is overnight, this is right now. It's been a nothing burger. We're all waiting for this U.S. news. All right, so I'm just gonna put the data flash back up, and then we'll hear it when it comes up. We'll hear it over the squawk box also in about about 1 minute. All right, so I'm positioned to the short side. I'm expecting, I'm the type of person that will not bet against the US service economy. And so these are all service related type numbers. And so I don't want to go against these numbers, right? I've already structured for a short outcome. I'm also positioned, just like yesterday, in case I need to be.
1 minute remaining. I'll lead with US ISM Services PMI.
So if I need to be, I'll be protected to the upside and ready to take it up, 50 pips or so, if that's where we're heading. I just want to mark 920 on here, 915, 920, right here. Okay, so now we have to wait and see what comes of this news and trade the actual reaction, right? I happen to be positioned. Most of you probably don't have a trade on right now, I hope. And so wait for the news to come and then trade. All right, let's see.
10 seconds.
Good luck, everyone.
52.6, 52.6, lower than forecast. 53, US factory orders month over month, minus 3.6%, minus 3.6%, lower than forecast, minus 3%. Seeing downside in dollar, upside in stocks. US ISM services prices paid 58.6, 58.6, lower than forecast, 62. Services new orders 56.1, 56.1.
Right, good morning, good afternoon.
Oh shit.
Good evening.
US core durable goods revised.
Let's get this show on the road. It is March the 1st. We have survived February.
Durable goods
Awesome.
revised. Minus 6.2%, minus 6.2%, lower than forecast, minus 6.1%.
The recording is playing in the background. Sorry. So here we are. Did we trigger the hedge? Yes, we have. All right, so now I'm positioned to the long side and I'm carrying all these shorts along with me. Okay.
US Treasury yields fall after data. 10-year yields last at 4.131%.
Okay, so my drawdown is locked and I'm now bullish by a little bit more than I am bearish. All right, so I'll be playing the bullish side of the equation, buying support. All right, all the US numbers came in below expectations. All right, so I want to buy a little bit of support, maybe right there. All right, let's see what happens. All right, I move back down. Would allow us to buy a little bit more. I'm playing the bullish side, right? Until I get to, well, let's remove this. I've been broken out of the...
The 10-year Treasury yields are the lowest since February 8th, and noting that Dixie currently down 0.2% on the session.
There we go. Just going to remove all of this. And if I zoom out, back to the daily, I'll put this Fibonacci back on. And now we're targeting up here. Right. But first we have to break this resistance. Ultimately the target is up there, right? And I'm doing so with a bullish attitude. I have to carry my shorts, right? And over time I'll be peeling off some of those losers, right? As we move up, I'll be peeling off some of the worst losers at the bottom. Right? As I'm moving up, I'm still making money with the bullish trades. Yeah, so just so you can see what's come about of this. All the numbers came in on the wrong side of the equation. Low probability outcome.
So Bitcoin surges to a record for the first time since November 2021.
I wonder what gold is doing right now. Gold is at new highs, 21.33. Dixie doesn't have support for another 30 cents or so. Right. Dixie doesn't have support for another 30 cents or so. The yields are breaking down. All right. Here's a buy. Right. And remember, I'm carrying my hedge, right? And so with the hedge trade, right, the drawdown.
Posted the US ISM Services PMI February report on the feed for all those interested.
The drawdown is locked. It doesn't get worse. And so while this is locked, I can continue to make money. I can continue to trade, right? I can continue to do the right thing, right? And if it pushes a little bit deeper, I can start booking losses down here, right? Like some of my most expensive losses. Where would be the most expensive loss? Right here. I'll take one. Right, so I removed one of the most expensive losses. And already that helps with the drawdown. and it helps me stay above, right? Now my hedge is even that much heavier on the bullish side because I just changed the offset between the two sides, right? I've changed the difference between the two sides. And that's the red line right there. That red line is a closed loser from 2 days ago or last Friday, right? We were looking for this, and instead we're going to the upside without the forthcoming bounce. Right, if we drop a little bit more, I'll close more of these losers. Right, I have to be careful not to close the hedge trade, right, which is this one here. There's a buy there.
We have also posted the US factory orders January report on the feed for all those interested.
Okay, I'll close another one. I'll close actually all four. So I closed one box from
Eurozone government
2
bond
days
yields
ago.
extend full. Germany's 10-year yield down 9.3 basis points at 2.303%.
Right, so you can, I still have my hedge, right? I'll take a long trade right here, right? I'm buying the red candle. I'm buying previous support. Let's go back to a 5 minutes so we can see what I'm talking about. Right, so right back here, I'm buying this. Right, I'm buying this support area here. And as I'm buying for the upside, I'm closing losers. Right, I'll take that and move it up. And take that, move it up. Take that, move it up to 920. All right, so I'm closing losers on one side and opening potential winners on the other. Right, so let's keep this separate. I want to make sure I don't end up closing a buy by mistake. All right, my buys are there. We're going to turn that around. Right, so thanks to using a hedge for 3 days, I've managed to survive. I've managed to put a lid on the losses. I control the losses. I close them when I deem I need to close them. Right, and the drawdown, as you can see, is already starting to go down. Right, I'm closing losers, so I'm bringing the drawdown down. I've given back maybe $50, $60 on the account. Right, so it's going from this pile, right, and I'm managing what's happening here instead of letting it all go to poop. Right, so remember where the ultimate goal is. We know where we're going, right there, right up here, and that happens to be 50 pips away. Right, so I'll be trading on the bullish side, targeting this area. And those of you following along should be playing along on the bullish side as well. Right, be buying support. Right. So what's taking place? If you go to an intermediate time frame, you can see it right here. This was our trend line going into today. And with the news event, we've breached the trend line, right? So as we speak, we found support on that trend line. Looking left, it's horizontal support, right? And we're expecting to go up from here. Right. If this was a prop account, we would have been losing since Friday. And it's not because the strategy is flawed, it's because the low probability seems to be the dominant probability, right? We're doing everything right. We're just having to survive more than normal. Right? Shrinking volatility has been causing us grief. What we expect to be a 70, 60, 65 pip day has been less and less and less and less and less, making it more and more difficult to do the right thing. Right? Today's average is only 48. 2 weeks ago, we were working with 70. Right, so there's our famous trend line, which we broke through this morning. Right, so instead of coming back to 61% of this move, it looks like we are heading to 50% of the overall move. Right, and that's fine too. There's more news coming this week, right? There's more to think about, as far as maybe turning this ship around. Yeah. Typical painful outcome. The market aims to hurt as many people as possible.
By Hungary's president.
I'm duplicating these efforts on another platform. There we go. That settles that. Comma, we want to be able to buy red, so it has to go up for us to be able to buy, right? It has to go up and then pull back. Right? I'm willfully playing with the hedge on and not closing all of the losers. Right? I'm doing this on purpose. Right? I'm playing both sides. Ideally, there's a chance, that we do have volatility because of this news coming, and so some of those losers might still be winners by Friday. I just have to survive. Right? This is why I'm choosing to close the worst ones. All right. And let's see if we can get it to 920 or so. Getting there today would be awesome. All right, so this is what we have. Because I'm running the hedge, I have to remove this. I have to remove this. And I have to remove this. I don't want to be doubling my risk, because I've taken some of the losers off. It's no longer even. I'm way heavier on the long side
The dollar
now.
yen down 0.38% to 149.94.
go back to our 5 minutes chart. And it's kind of hard to build a ladder when there's nothing on the left to make reference to. Right, so we just have to keep looking at this wick and expect a break. And then any kind of red candles now in this environment, we want to add, we still have 2 clicks, right? So we can still add 2 clicks. Let me find a box and let us trade with the box. Let's put a box on the top and then add one to that little break right there. And then if we measure from that break, then we are expecting to go to the top of this box right up here. Right, so the edge of the box, I want to add a buy. I want to add a long here. All right, so being hedged is not a solution. It's just a band-aid. It's buying me time. All right, I get to carry these losers along with me. Right, this drawdown, I get to carry that drawdown along with me. And as I'm booking small profits, I get to eat into this drawdown. Right, when the event took place, the drawdown was $400 something, and now we're at 378. At the same time, the account has not blown up. Right, we've only booked a handful of losers, and we will be booking winners. Right, that's a non-issue. Right, so the psychology has to be glass half full all the time. Right, there's always another trade. There's always the next trade if you structure it. Right, turning the table around is what we're good at. We expect plan B. We don't hope for it, but we have it ready, right? We expect that it's possible. The people that only have one plan, they don't have an alternative. Their one plan usually includes, walking away empty-handed, where our plan B gives us a second chance and plan C gives us a third chance. Plan D, the fourth box, gives you your last chance. Right? It's this fighting attitude. And carrying drawdown, you can carry drawdown. There's
So
nothing.
taking a look at the Fear and Greed Index, 76 out of 100 equaling extreme greed, and the Crypto Fear and Greed Index, 90 out of 100 also equaling extreme greed. And taking a look at the VIX, currently up 5.34% at 14.2.
And so carrying drawdown, especially on the short side of the euro, I'm actually making money just with swap by holding on to these shorts, right? So if I can hold on to my shorts and fix them as I move along, if it takes me 2 weeks to fix this, I will have earned swap in those 2 weeks. All right, so I am booking losers, I am booking positive swap, and I'm also booking profits, all with the hedge on. Right, I'm playing 2 books at once. I've doubled my trouble. All right. Let's see what the equity curve looks like today. After booking these losses, we're dipping. We're starting to take a little dip. All right, I am managing this instead of taking a disaster dive. When your brain tells you it's a good buy, it's a good buy. It may be a goodbye house, goodbye car, goodbye wife. It could be a goodbye everything trade, right? Second guess everything. Always have plan B. All right, here's where that red candle we want to buy. 2 clicks. And then I have to go and remove this, because I'm still heavier on the bullish side. There we go. Did I say bullish? I meant bearish. 1, 2, 3, 4, 5. I booked 5 already. 1, 2, 3, 4, 5. Yep. Maybe I'll book another 4 or 5 more if we come down a little bit more. And if we can revisit this area down here, I'll close another 3 or 4 more losers. So the average of everything that's on here right now, because of the hedge being so lopsided, like heavier on the bullish side, I'm pretty sure my break even is somewhere up here in this area here, right around here. Right, I had it positioned, I had the hedge positioned at 36 pips from my original break even. Right. So we're making money already and booking losers. All right, we're managing the position that we find ourselves in. All right, if you can limit your time at the casino to a couple hours per day, a handful of pips, a handful of winning trades, and walk out of the casino. Types of events like this typically won't get in your way. Right? You can see this coming on a calendar. You can wait outside of the arena until the news is out and then step into the ring. All right. And so there's a red candle. It's right on the edge of the box. I need to see a little bit more of a pullback like that. 1, 2, 3, 4, 5. A little bit more. If it makes a lower low, I'll buy it. Yeah. Right, so over time, we'll be closing the losers on pullbacks like this. All right, so there's a buy. And if I come over here, I can remove one of these. One of the worst ones. Maybe this one. And 2. These are the buys, and these are the sells. Right there. 3. 4. All right, I'm peeling off losers and I'm keeping the hedge on, right? I'm shifting the weight from the bears to the bulls. All right, so I'm removing from my bearish book and I'm adding to my bullish book. All right, you can see the drawdown is staying pretty well constant. All right, the account is not blowing up. I'll book another one here. This will just make it easier to win once the bullish move resumes. There's a $10 one. Right. By shifting the balance of the teeter-totter, the seesaw, right? By moving my money from one book to the other book, I get to manage what's happening at both ends of the equation, right? Both at the drawdown or up draw, right? I'm about to be in up draw with my bulls while I'm in drawdown with my bears, right? And I'm shifting the balance of that equation by closing losers and allowing the winners to eventually come out ahead. Right? So some people trade in a hedged environment from the get-go, right? They would open a buy and a sell at the same time, let the market choose the direction, and then close one versus the other, and then let the winning side take over, right? And this is kind of what we're doing here, right? It's a idea of fighting your way forward. Right there, I'll close another one. I want to close it when it's cheaper, right? The lower it goes, the cheaper the loss becomes. And this will allow the hedge to go ahead and make me money. Right? If all this fails, so if everything comes back down here, as though, you know, I've been wrong all along, then my drawdown starts to become less dramatic, but my bullish side starts to add to the mess. Right? So I'm responsible for double trouble here. Right? So I'm positioning it so that more or less my resolution is becoming a funnel. It has to come out my way because I'm running out of bullets and I'm also running out of options. Right? Eventually, if all hell breaks loose, I may have to close everything that you see here and book a $300 loss. All right, if I closed everything right here, right now, that's $320 of wasted effort over the last 3 days. But if I wait a little bit, if I structure things, if I engineer things, and if I have plausible targets, things that are doable, achievable, you know, within reach, I can fix the problem before it becomes a nightmare. Right? So because of my weight on the bullish side of the equation, the drawdown is actually going down. And I'm hoping to start booking winners here in a few minutes. Right, imagine going up to the 50% in time for further news along the calendar. Right, let's go take a look at the hourly. Actually, let's go take a look at the 4 hours. Right, so we have a fully loaded calendar for this week. This is not happening, and so we are looking at something like that. It would be nice if we made it to 61. All right, but right now I'm targeting 50, and that's usually a good place to be, you know, the middle of the range when there's big news coming. All right, today's middle of the range was right here, and we were at the middle of the range, right, just in time for the news to come. And so I think we're repeating the same similar type of setup, right? We're just going to go up to that 50% and wait for the next big piece of news to come. Right, so let's look at it again on our 5 minutes because of the detail. Right, this is what you want to buy into. This is slowing momentum down, and if you measure, it's probably something in our neighborhood of our measured move. Right, this is our typical environment right there. That's what we're used to buying into. All right, here's that fourth click that I'm looking for. And now I wait. All right, bottom of the hour. This should be the end of the retracement. That's typically what we would see at this time. All right, so by looking at historical analogs, we create an environment that we recognize and we know what to do if something is awkward. Hey, this is unknown to me. This is strange. I've never seen this before. This does not look like what I'm expecting. And so anything that, pokes curiosity, if it's abnormal, address it as such. Maybe it's a clue. All right. So if you're playing the long side, you're making some wins right now. Right. I'm going to be carrying the hedge, and I'll be trading the bullish side of the equation for the next few hours. I'm gonna, you can see, oh, this is my break even. Can't be. Oh, that can't be right. Oh, I want to buy this. The red candle recycles the trade that just closed. All right. Buying time. Bunch of low probabilities all stacked up against us this week. That's the fun of trading, You never know how they, the handlers, will manufacture the outcome. It's forward looking, right? Many accounts with many more zeros than us have a goal, and they position themselves for that goal. Sometimes you can see some of that expressed through the options market, where they expect the market to be in the money. All right. We're still contained to that box. Our famous standard deviation. Maybe this will allow me to close another loser right there. Make sure it's not a buy, and I'll close this one here, and this one, and this one, and this one. So that's 4 more losers that I closed. All right, so our drawdown is now down to 280. The account has dropped to 5,700. What does that look like? That's a tiny little nosedive, right? Nothing we've never experienced before. Right? We can recover from this, maybe even today. Right? We've experienced it before. Right? That's not scary. It's part of the game. All right, so I've closed 4 losers. I recycled that trade already, so I can't put any more in this box unless I close some. I wonder what the ADR looks like right now, average daily range. So today's range is 36, 35, 36, and our average is 48. All right, so we still have room to roam to the upside. I'm surprised we're not moving more than this. But nonetheless, we can make money as long as it's moving like this. Yeah. Right, the long tail stop is not there to be the stop loss on each and every trade, right? It's the stop loss to protect the account. It's the ejection seat. We are responsible for the losers, and this is what you see me do today, right? I'm booking, some of these losers are from Friday. Some of them are probably from yesterday. Actually, let's go check. Oops, sorry, it opened on my other monitor. There we are. Where do these trades come from? Right? There's a couple more left down here. There's a few more left over here. There's a few left, right? I'm peeling off the risk. I'm taking the risk off as things progress. Right? And that will allow the hedge trade, which is equal to all of this, which is now heavier because I've been removing some of the shorts. The hedge is now becoming heavier and heavier and heavier on the long side. Right? And as the hedge becomes heavier and heavier on the long side, eventually it should allow me to overtake, it should allow me to overtake my drawdown. Right? And as I keep carrying drawdown forward, days upon days, because my drawdown is built mostly on shorts, I earn swap. It happens to be 8 cents for 2 micro lots. Right? So I happen to be earning swap as this thing is moving, against me. Right? So there's a lot of alternatives to just booking a loss. Hedging is one alternative. This is the idea. You can spread your risk in the first place, so you don't have to rely on your one big stop loss, but instead you could rely on many, many, many small stops. Right. There's a million different ways to approach it. It all depends on what you see as a viable outcome. Right? This is a good place to close some more of these losers. Let's sort it by pips. I just took 4 more. Right, so the drawdown is down to 240. The account has been brought down to 56. Right? And I'm still positioned to win on the long side. Right? We can't keep forgetting that I'm now running 2 independent books. Right? I was running just shorts until today. And now I have shorts and longs, and I'm taking care of them independent of each other. I'm trying to get a better price on the losers, and I'm allowing myself to build a position that will win in time. Let me take some of these and make them swing trades. Just because I have the time, and I'll be here to manage them anyways. If I go into another box, if we go up a box, so if my box 1 moves up, I will continue to trade for 3 pips, 3 pips, 3 pips. All right. And so as I've been closing the losers, right, as I've been closing the drawdown, the overall break even is moving in my favor, right? I'm shifting the weight from shorts onto the longs. Now the longs are expected to start to win. Right? So as I shift that weight, I'm shifting from drawdown to up draw, and preferably enough of it so that I can make back my losses. Right? So. Trading in one direction is one way of looking at the market, but if you look at it, objectively, it's doing ups and downs. It's going in two directions, depending on the snapshot you take, right? Depending on the time frame you use. And so you could be both bull and bear on different time frames for different reasons, and that's what you see here. It just so happens that holding on to shorts overnight is earning me swap. Right? It's earning me swap. If I was long overnight, I'd have to pay. Overnight is 5 o'clock New York, 5 p.m. New York. All right, I just want to see this go up another 30 or 40 pips, another 4 boxes or so. That would be awesome. If I can move box 1, so if we can get into here, this being box 1 right now, if I can get into here, I'll be able to recycle or open 4 trades that belong in that box. Yeah, I usually don't find myself hedged this much. This February, these last couple of weeks have been really strange. Shrinking volatility, average days of 49 pips, 48 pips. What's that? We're still making money. We're still making progress. A lot of you guys are posting fabulous results. That's awesome. It gives me goosebumps to see you guys do this stuff. I cheer for you guys, man. This is awesome. All right, that's what we want. There we go. Yay. Someone's waking up. All right, look at our drawdown. We're down 200 bucks. And now that we're in this upper box, I just want to see a little red candle, right? So a pullback, a retracement, or retest, anything that shows cheap, and I'll buy, right? And the idea is to make 3 pips on that purchase. Right? I've built a position for the long side. I'm going to profit from 3 pips, 3 pips, 3 pips. And there's 2 clicks. We're trying to put back in the clicks that we had to give up. It's nothing wrong with losing at trading. It's when you don't manage the losses, or when you don't, when you target a statistic and you don't control the environment within which you apply that statistic. So you don't look at the macro, you don't look at different time frames. you're missing out. You're lying to yourself thinking 2 to 1 will be your salvation. It's If you target 2 to 1, you're allowing yourself to lose 60% of your trades. Are you really allowing 60% of your trades to go bad? What's wrong with that? Like, you're here to win, right? So the psychology of 2 to 1 is forcing you to think the wrong way. And besides, Mr. Market has an ability to find 1 before it finds 2. All right, so here we are in the upper box after a red candle, right? Let's see if we can bounce off here. There's 3 trades there looking to bounce. There 3 or 2? Can't tell anymore. If we drop a little lower, like if we come down a box or 2, I'll be closing more losers, right? Taking more weight. Consider it ballast, right? If I have this green balloon, I have to get rid of red ballast. Right? And the more I get rid of red ballast, the more I get rid of drawdown, the easier it becomes to eventually turn green, make money. Right here. All right. It's the worst tool in the toolbox because it's so expensive and it's so problematic. Like anything can happen right now, and the market could drop, and now I'm in between the drawdown at the bottom and the hedge at the top. I'd be having to sit on my hands and do nothing, right? The market has to find a direction for me to clean this mess. Without clear direction in this environment right here with the hedge at the extreme top, I have no choice but to keep peeling off. All right, so intraday, what does that look like? Let's go check the 5 minutes. Ooh, look at that. That looks bullish. Looks bullish to moi. Red candle. Here's that 4th and final click for that box. Awesome. Giannis, good job, sir. Well done. 0.3%. Yeah, do that every day. You know, that's all you need to do. 0.3% like that. That's awesome. That's fantastic. You know, be consistent and walk out of the casino. All right. What is gold doing right now? Gold is coming off its highs. We're at 21.29. We were at 21.30. Cool. Gold is coming off. That doesn't mean it can't go higher. The next target on gold is 2150 and then 2200. So if you're trading gold, don't sell it. Look for opportunities to buy instead. All right. This would have been a good buy here. I was looking the wrong way. I don't want to buy down here because it's the wrong box for me, and I already have trades in that lower box, right? I already have trades down here, and so I cannot put any more money there. I have to start recycling some of the existing trades, right? And so I basically spread my risk. I have 4 or 5 down at the bottom here. I have 3 or 4 or 5 at the top there. I have to pace. I have to slow down, right? Otherwise, I'll run out of bullets, and the opportunities will keep coming. Yeah. Betting against the US service economy is like going on a fool's errand. And today we've been asked to go on the fool's errand. Oh well. It's like first day on the job, you send the trainee to go get a bucket of steam or, plaid paint or the wood stretcher. And the market is an illusion machine. It's out to get us, right? It's tricking us into thinking something is happening, all the while something else is really taking place. Here's that support area, all right? If you look to your left, right around here, all right, we have all of that. Our drawdown is down about $200 from its worst case scenario right there. Right? When we triggered the hedge, the drawdown was about $400. And because we've booked some of the losers, we've actually taken out of the drawdown and put them into the equity column. We've removed them from our balance, from our equity, right? We've booked the loss. Big difference between booking the loss and carrying the drawdown. People confuse the two all the time, right? We exploit drawdown by having a long tail stop on purpose.
Oil prices turned positive after falling by $1 a barrel earlier in the session.
There you go. That bodes well for us too, right here. Yeah. Low probabilities in some cases can also make you money, Plan B, plan C, plan D. It's not always a disaster. That's what we engineer, right? We build the outcome because we understand what the market is capable of on average. Yeah. Booking a dozen losses like this is difficult, for most people. But when you have the winning side already working, booking the loss is a necessary evil. And that now becomes something easy to agree to. Right? I'm already doing the right thing on the right side of the equation. It's no questions asked. I'm happily booking the loss. I don't want to book all of them, right? Because ideally this hedging will take me to break even. And from break even, maybe will take me to the target. Right? So I have 12 pips of plausible profit here. between what I think is the target and where my break even is. And so I can keep dragging that break even down further and further by removing losers or adding winners. Right? The idea is I want to spread this further. I want to have a bigger gap between my target and my break even. I've shifted my risk off of the shorts and I've put it onto the longs. And if we can break this right there, I make money. I might even be able to make back the losses that I booked. Right? That's the part that we try to engineer for. Right? Minimize the pain. All right, approaching the top of the hour. I'll be able to actually now, because I'm closing these, I'll be able to actually put a picture at the front of that video from the other day and finally upload it. It's been driving me crazy not being able to close these trades. I have 3 days of uploads to do now. Let's see what comes of this next. Can't win them all, that's for sure. Come on, come on, come on, come on. If it could just bust a move. At least these last few days will be interesting content on the YouTube channel. All right. There's opportunities there to review this stuff. And make sure you comment on those videos if you have, questions or dilemmas. Come on, come on, come on, come on. And because of the location, I can't really take any more trades here, right? I already spread the risk between the two boxes. I need to see a move out of one of these two boxes. I need to recycle trades. Right. Slow, man. It's like trading with so slow.
US to sell $95 billion in 4-week bills on March 7th to settle on March 12th.
The only news left on the calendar is a Fed speaker in 1 hour from now. All right. As we speak, we're entering the London fix. All right, so volatility could be coming in finally, which would be kind of nice. And then the next main event will be setting up for the banker's close, and then eventually the bank's actually closing. Right? So it's a chain reaction. We just have to follow the events. Oh, there's not much recycling going on these last couple of days. I had a bunch of pending trades on a different account that all expired without triggering, so that sets that up. That cleans that mess. Everything else is at par. Let's see. Let's just go over this while we're waiting. Right? Dollar index and the yields. Right? Like I always do, we look at the 10-year treasury notes, bullish. 10-year bonds, bullish. Treasury yields at support. And the Dixie at support, right? But we still have room to the downside. Right? So be careful, right? When we look at it, when we look at just commodities in general, right? Gold is coming off its highs, silver is doing the same thing. When we look at the equity markets, this time of day, right, an hour and a half into the trading session, or 2.5 hours into the trading session, right, we're at the top. And the majors, as of today's news, right, this is the dollar index, and all of the majors reacted appropriately. Okay, so nothing new to see here. It's a low probability that came to fruition. We must survive. Yeah. Yeah, gold has more upside. I was looking at 2150 and 2200. There's no sense going against this. Well, if it pulls back, don't don't short the pullback. Don't short gold. Watch it come down and then choose where you want to buy. No. It's, ouch. I put my finger in my eye. Here's the pain. Right, inside swing right around here. If we readjust the box right here, that's 9 pips. Let's take this out of the way. Maybe we need it here. Don't know yet. All right. Maybe this will allow me to close a couple more losers. I'll take 1, 2, 3, and 4. All right, so the drawdown is again $200, 210, and the account equity is dropped, right? So I'm shifting from the drawdown to the loss pile, and then hopefully I'll be making that back shortly on the bullish side, right? Now this space has gotten even larger. Right? I'm looking to earn even more money on the bullish side. Let's zoom into this. There we go. Let's put a line right there. Ba, 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 da. Oh. This is when I need music, headphones or toe tapping tunes. Otherwise, my brain starts to second guess everything that I've done here. Right. Market has the ability to get under our skin. Looking left on this 5-minute chart, we have all these wicks, right? One here, and well, you know what wicks are, you can see them for yourself. We're testing support. And so what will come of this? Right? Are we going lower, or are we actually finding support and going higher from here? Right. Ultimately, the goal would be to go up here. That'd be awesome. Yeah. The waiting is the hardest part. Come on. Right. Testing the extreme low right here. Watch it make a slightly lower low just to go turn around. Right. That would be normal market behavior. Just like that. How annoying is this? So frustrating. Right. Our worst enemy. All right. Taking out both sides of the range. They took out the top right there, just by a couple of pips. Now they're taking out the bottom, this bottom here, by a couple of pips. Let's see if they break this one. Oh, I'm annoyed. Bum, 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 bum. All right, breaking the low. Another 2 or 3 minutes and I'll let you guys go. The plan is we're looking for 9:15 to 9:20 in order to close the longs. And if I can get to 9:15 or 9:20, I'll be closing both books. Right? So if I can get up to that 50% Fibonacci that we have targeted, right? If I can get up to here, I'll be closing both the shorts, all of the shorts, right? So everything comes off, and I'll be closing all of the longs. And hopefully that difference between right there, this 20 pips of difference, that's 20 pips on all the bulls. So that should work in my favor, right? So there's a lower low.
Break even has been moved because of that.
What the hell?
So as long as I.
This is my video editing software that's playing in the background. It's so annoying. All right, so lower low, testing the trend line right here. All right, so we have an official outside range. I guess you could put that over here now. All right, so we went from here to there. We went from here to here. And now my next target is 920. How far away? How far away are we? 55 pips. That's quite a ways away. It's doable. We cannot lose faith. That's the important part. Right? The strategy will work, provided you give yourself the ability to be wrong once in a while. Come on. It'd be nice to see somewhere like retesting this.
Good morning.
Oh,
good evening.
Freaking hell. I don't know why it keeps restarting like this. I keep pressing pause and stop. There we go. I closed it altogether. I'll just reload all the videos after the fact.
According to Interfax, Putin says that OPEC Plus sets the task to achieve price stability in the oil market and not to raise prices.
Yeah. Come on. Oh, this lack of volatility is annoying. It's the most frustrating thing. Oh, no, we're here to trade, and the market is sitting there, pulling its thumb at us. Thumbing its nose, I should say. All right, so having survived an outside range literally every day this week, you must be getting pretty good at it. Okay. Come on. Let's go, let's go, let's go. I need cheerleaders. I need a squad. Booking losses and keep on smiling. I'm not frustrated from the losses. I'm frustrated from the lack of income. Yeah, go, 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 go. That's exactly. We need this to go, go, go. It knows how to get under, it's like working the night shift, trying to sleep during daytime, and you have a whole family in the house, how annoying that is. That's what this feels like. It's like, just let me win. Just let me sleep. Come on. All right, so this right here will have a lot of people thinking, oh, resistance, maybe we need to sell this, right? And there's nothing wrong with having a short bias. There's nothing wrong with having a long bias. Trade what you see fit, as long as you define where you're going to be wrong, and then deal with being wrong. It's not something we sweep under the rug. It's not something we pray goes away, right? This is something I've been dealing with since last Friday. I try to protect them as long as possible, right? But having broken the high, I have no choice, right? Having broken this high is the one that worried me all week, right? Let's go to an hourly chart so I can show you. All right, so this is from last week, and this is also from last week, and this is what we've been competing against this week. Having broken that level this week, we're looking to go up. All right. This was what I was protecting against until we broke it. All right. Having broken it, I can't fight this anymore. I have to admit, okay, the losses are on the short side. That's okay. Right? It's part of the game. Right? So if I put the box there, I already have all of 8 clicks in that one particular box. So I'm not going to put any more in here because I have 8 clicks already on the board. It just depends on how you line up the boxes. Right? It all depends on how you line up the risk. Right? I have boxes, I have trades in this box and trades in this box. And if I adjust the measurement, the device, the measuring cup, if I move the measuring cup in this way, I could lie to myself and pretend that I have more money to spend that I don't. And so I don't want to do that. There it is. There's the move. All right. This is what we're testing right there. All right. Retracing that breakout. All right. Nothing is impossible if you put your mind to it. You can solve it. Time is it? I have to go soon. I have to go. 3 minutes. And so I'm going to leave you guys with the plan. If we measure from this low here and then stack boxes, you know, assume it's going straight up, straight up. An average move would be 4 boxes. All right, so ultimately it'd be nice to revisit 890 or 895 today, you know, before calling it quits. I'm looking for a little bit further than that. And so that may take us into tomorrow. Oh, look how even that is. All right, that may happen today or it may not, who knows? All right, but I'm positioned for it. And if we breach this line right there, anything above is profit. And if I start closing more of my losers, that white line starts to move in my favor, right? It opens up my profit window, right? So it's a balancing act, and I choose which side of the seesaw, which side of the teeter-totter do I put my money on, right? Right now I've been shifting off of the shorts onto the longs, and I would advise you do the same thing. Actually, I can't advise. I'm just telling you what I'm doing. There you go. All right, so I'm going to let you guys be. The plan is remain bullish. If you're trading 3 pips, remain making 3 pips off of support. Okay? And I'll talk to you guys tomorrow morning. Hopefully we'll have closed these trades and we'll have a clean slate to work with. Can't wait to start from scratch. All right. Have a good day, fellas, ladies and gents. Trade safe, trade small. See you tomorrow. Bye-bye. Peace, everybody. You too, James.